to give a little summary of what this meeting is going to cover tonight, we're going to start with a quick roundup of our campaign aims and actions. We're then going to have an action that we want to call on you all to join in. And we'll hear from our main speaker tonight, who's going to explain why divesting from fossil fuels is good for our pensions as well as our planet. So a little bit of Zoom etiquette just before we get into the full bit of it. If you could keep on mute unless you're speaking, that would be brilliant. It just makes it a bit easier for everybody else to hear what's going on. We don't have any sort of like tellies in the background or anything. And if you have any questions during the presentations that we'll see tonight and hear tonight, if you could just drop them into the chat. Nick will be keeping an eye on all those questions so he can summarize them and ask them to the speakers. Okay, thank you very much.
Okay.
So there were some encouraging developments a couple of months ago. So let's just briefly remind ourselves of them. In mid-May, the International Energy Agency published a landmark report that sets out a pathway to end the fossil fuel era. It shows how the world's energy supplies can be made net zero by 2050. The most striking statement was this: there is no need for investment in new fossil fuel supply in our net zero pathway. Beyond projects already committed as of 2021, there are no new oil and gas fields approved for development in our pathway. So no more investment in fossil fuels after this year. That's big news for all investors in gas and oil stocks like West Yorkshire Pension Fund. Later in May, a Dutch court decision required Shell to cut all of its emissions by 45% within the next 10 years. The court challenge was made by Friends of the Earth, who described the decision like this: this is a turning point in history. It's the first time a judge has ordered a large polluting corporation to comply with the Paris Climate Agreement. The judge has left no room for doubt. Shell is causing dangerous climate change and it must stop its destructive behaviour now. Also in May, an Australian court decided that the government has a legal duty not to cause harm to Australia's young people by making climate change worse when approving coal mining projects. The challenge was made by a group of teenagers who sued the government when it allowed a new coal mine to open. And then finally, the COP26 conference in Glasgow later this year means that climate action has a higher profile than ever in the UK. We can use that profile to ramp up the pressure on West Yorkshire Pension Fund to do the right thing and divest from all fossil fuels. So we'll now move on to hear more about Fossil Free West Yorkshire campaign from Mark Morris. Mark is a Unite member and a membership representative on West Yorkshire Pension Fund. He'll give us a brief update on the campaign's aims and actions this year. And if you have any questions for Mark while he's speaking, then please drop them into the chat box. I'll hand over to you, Mark.
Thanks, Louise, and thanks everyone for joining us today. I'm sharing the wrong slide, bear with me. So as the first slide shows, stopping funding climate chaos is what fossil fuel divestment actually means. You don't have to look too far into the news archives to see what effect fossil fuels and the climate change is having. So to give you a brief overview, what is the campaign trying to achieve? So there are 18 UK pension funds, and the main reason that those pension funds exist is to pay the pensioners with what is deferred pay. It's not money from the money tree, it is money that they were entitled to as pensioners and as employees of councils and other arm's length organisations, and it's their money. So basically the campaign is trying to achieve the divestment from fossil fuels, and we're trying to make sure that any exposure that these funds have got to fossil fuels is reduced as quickly as possible. So many of these funds have also committed to increase investment in sustainable projects like local renewable energy, and West Yorkshire Pension Fund could be the next one to do that, as long as the right pressure is applied at the right time. So as I say, why do we want to divest? It's because we're trying to protect the future of the pensioners that have paid into this scheme. Let's face it, it's their money and their future that's at risk. And we'll go through what the campaign's been doing, what local successes we've had, and how you can take action. So as I said, divestment is the opposite of investment. It works in one of the strategies that resulted in places like South Africa ditching apartheid. It's the same leverage. The global fossil fuel divestment campaign asks for institutions such as local government, pension schemes to move their investments directly out of coal, oil, gas industries, but over a sensible period. I think most of the pushback that happens from the people that are on the boards is that we'll lose money as a result of divesting. I think they can't afford not to divest. So doing it over a sensible period, let's say 3 to 5 years, is a sound option. And it's about ending investment in the companies that drive the climate crisis. So companies like BP and Shell and starting to invest in solutions, trying to push them to invest in solutions that make the future worth living in. As I said, it's the pensioners that will be living in the climate that's uninhabitable if we continue the way we are. So some pension funds are already investing in good quality affordable housing or community renewable energy. And that's just one example, but they are creating local jobs that are low carbon to the economy. So our councils have a responsibility to pay the workers their retirement and to ensure that there's a future worth living. So my next slide, you should be able to see that you're probably asking why divestment. It's an effective tactic, as I've said. It's going through the same slide there, bear with me. Yeah. So why do we want West Yorkshire Pension Fund to divest? Well, the ethical argument is that climate change is already here. My parents are from an island called Jamaica. There's a beach called Hellside, and it's already disappearing. Over the past 10 years, the beach has got shorter and shorter. The risk of hurricanes and flooding has increased. So I think we've all got a responsibility to take part in this change. It's not down to one group of people, it's down to the whole planet to take action. So the ethical argument is that it's an emergency and it's here now. And it's the emergency is being driven by the fossil fuels that are extracted from the ground. There's plenty of scientific evidence to support that fact, unless you're Donald Trump, of course. But the argument is already being won. We can see in the press recently the floods that are happening across Europe and some of the wildfires that are happening across Canada and America. It's undeniable that there's change happening. So the fossil fuel companies are very reluctant to change their course for obvious reasons. They've got investments, but as I said earlier, the cost of doing nothing is more a riskier option than making the changes that need to happen. So there's much more awareness now, and the link between, as I say, fossil fuels and climate change is obvious. So the investors are aware of this, and this leads to our next slide, which is why do we want West Yorkshire Pension Fund to divest from the fossil fuels? So as I said, the West Yorkshire Pension Fund has a duty to its members. Majority of the time that we've pushed them in the boards that I've been a member of. So I've been a member of the West Yorkshire Pension Fund board, and I'm also on the joint advisory group now. And in the past, we've been pushed back. And as I said earlier, the idea that they will lose money as a result of divestment, it's even been recently reported that the Bank of England are going through stress tests to prove that the risks of doing nothing are greater than the risks of continuing as we are. So during my presentation, and I'm sure Councillor Scopes, you'll see increasing arguments as to why it makes perfect sense to do what the campaign's been asking the pension fund to do. The fiduciary responsibility is an argument that's been made in many different ways. And I can remember in some of my training that's happened with Unite the Union, we were given the example of Arthur Scargill making the argument that the coal pension the coal pension funds should never be invested in alternative coal mines in other countries. The argument being that fiduciary responsibility does not mean engineering your own downfall. And I think that's what the pension fund is stuck in now. It's considering its immediate profits rather than the long-term risks of continuing. So, yeah, as I said, the Hebden Bridge floods of 8 years ago are there, and locally we've seen that it has an effect on people and businesses. They're not able to get insured, reinsurance has been an issue, some have been flooded more than once, and divestment is the kind of response that meets the scale of the emergency. Instead of individualising action, like turning off lights, it focuses governments on taking action on the causes of the global warming. So ExxonMobil invested in modelling to see how bad it is going to be, to see their models accurately predicted the weather patterns as far ahead as 2012. They've also funded lobbying campaigns and media to sow confusion, saying that we need to see more science and casting doubt on the consensus. And as I said about Donald Trump earlier, the idea that they haven't got a personal interest in continuing the status quo, well, I don't need to make that argument, it's as clear as mud, that they would prefer things to stay as they are. So in the pension fund, as it's organised now, there's different ways of structuring a pension fund, but West Yorkshire has several committees which operate. There's the Joint Advisory Group and the Investment Advisory Group. So the Joint Advisory Group takes care of most of the administration operation. It looks after the practices that the employers will do for for their contributions, and the employees' contributions to be made. But the vital cog in this machine is the Investment Advisory Panel. It's made up of councillors from across all 5 local authorities and some of the arm's length organisations. It also has members from the unions who represent the members who pay the actual membership. And up until recently, there was a direct connection between the local councillors in that they were allowed to be members of the pension fund. For whatever spurious reasons the government decided, they've removed the councillors from the ability to be members of a scheme. And I don't think that if they, and this is me being a bit controversial, I think some of the councillors, if they were members of a scheme, may make some different decisions than the ones they're currently making, because it is short-termism. So as I said, the Investment Advisory Panel, they're the main decision makers when it comes to making investment choices. So the power does rest with the councillors, and the councillors are directly, they're meant to be directly impacted by anything that their elected the constituents' decisions. So we have got a lot of power. It's about using that leverage in the right way. So next slide. So this campaign's been raising awareness. It's been campaigning in the media. It's been campaigning with councillors, trying to get their support for what we're asking them to do. And so far, we've got plenty of councillors across all of the 5 local authorities. There are several MPs who also supported it. And during the local police and crime commission, mayoral elections, we also got some of the prospective mayoral candidates to support the campaign. And as I say, the campaign's focusing on the councillors, the trade unions, and the member reps, namely while I'm here. So the Leeds Labour councillors voted this year to make West Yorkshire Pension Fund divestment a party policy. Calderdale Council Cabinet agreed last week to support West Yorkshire Pension Fund's divestment from fossil fuels, and 10 West Yorkshire MPs support the campaign. And also, as it says there, 80 West Yorkshire councillors cross-party are also on board, and we're getting lots of local coverage in the media. So we want to thank all of those councillors and MPs and trade unionists who supported the campaign, and it does reflect some of the successes that we've had so far in raising this issue locally. So as with all campaigns, you do need to have a strategy, and the media coverage is one key part of it. So we've been able to get plenty of local newspapers and some national newspapers to cover this issue. And no campaign would be complete without foot soldiers to do the shouting at the buildings and making sure the voices are heard as loudly as possible. So the Global Rise for Climate Day was in September 2018 in Bradford. There's a picture of some of the campaigners there. with reps from all 5 West Yorkshire councils representing. Maybe some of you are in the Zoom room tonight, but the young working class black and brown speakers were the highlight of this event. Some were as young as 10, calling on our politicians to act on climate change. They were representing people of colour and the poorest in our world and those most impacted by the climate crisis. A film on the event has been shared all over the world. So this was the latest before COVID brought events online. It was organised by Leeds Trade Union outside the West Yorkshire Pension Fund, which is in Bradford. And this was taken from an AGM that happened in 2019, if you can remember a world before COVID. And this sparked a spontaneous pro-pensioners revolt inside the AGM. Now, I don't know if any of you have been trade unionists, but the pensioners are some of the most vicious and ferocious campaigners I've ever come across, partly because, you know, they've seen it all and they understand the importance that campaigning makes. The meeting has always been a stage managed event with only officers and the chair speaking. I think they ask for questions 10 days in advance to give them a chance to be able to create their answers, but there've never been any discussions or questions from the floor. However, this time was very different. Before the event, the pensioners from the audience walked out to the front, took the microphone and spoke passionately about their anger that the pension fund was being used to ruin their grandchildren's future. This led to one member after another standing to speak to complain that they were not being listened to by the fund. They echo the concern about climate crisis and the demand that their money was invested in a healthy, safe future for the world and not for its destruction. Okay, so I can see the Unison flag there in the Unison office, which I've been in too many times. So Unison nationally voted in 2017 for all of their local authority pension funds to divest from fossil fuels. Divestment is now Unison policy, and they've published a guide on this. Locally, this is not implemented by Unison reps on West Yorkshire Pension Funds boards who say their job is not to represent their members, is to represent their members. And it comes back to that fiduciary responsibility. I think there's going to have to be a change in the way that that's interpreted, because it doesn't mean just making the most money. It should be the most sound judgment on what is a long-term investment. So the local Unison has voted twice at its annual conference for West Yorkshire Pension Fund to divest, and then worked with the fossil-free West Yorkshire campaign for a year afterwards to support the campaign. And the picture you can see is, as I say, from inside Kirklees branch of Unison. In 2017, the UK Trades Union Congress, TUC, passed a resolution on climate change that called for the TUC to investigate the long-term risk to pension funds from investments in fossil fuels, among other things. So I have rattled through that quite quickly, but now, you know, it's pretty much over to you. How could you take action? And there's 3 bullet points there that give you options on how you can engage with your local councillors. The contact details, the link will be shared in the chat box if you want to click on that. And as we said, the councillors have as much power as anybody in the pension fund. In some ways, they have more power than the officers. Whatever decisions are voted on, the councillors are the ones who have the biggest voice in any room. So please take advantage of speaking to your local councillors. There's a link also to the briefing that's been shared. And if you want to keep in touch, there's a link that will be shared that is a newsletter and a way of taking part in our future meetings. But I'd like to thank you for listening. And I think now I'll hand back to Louise.
Thank you very much, Mark. So we haven't got any questions directly from that part of tonight. We have a very quiet bunch of people. If you do have any questions, then please do just drop them into the chat box and we'll keep an eye on it. We have got one coming in from Kevin there. So Mark, it's to you. Do you happen to know if there is an example of an equivalent organisation anywhere else in the UK that has divested from fossil fuels or is doing so currently and has therefore on around the something that I can't pronounce. I do
The
apologise.
fiduciary duty. Can I pick that up,
Of course,
Louise? Yeah. The short answer is yes. So there are several pension schemes ahead of us in West Yorkshire. We are in West Yorkshire. And also, you'll get to in my slide. There's the Norwegian Wealth Fund, which was clearly created by offshore oil, has divested from fossil fuels, or is divesting from fossil fuels for purely investment purposes. So, purpose of getting more wealthy, because they think in the long run, not holding fossil fuels is going to be more attractive investment. Mark, you're speaking, but we can't hear you.
Yeah, as far as I'm aware as well, it won't come as any surprise to anybody. I think the Environment Agency are one of the local government pension schemes that have divested or are making big strides to divest in.
Yep.
And I think BAF, I could be wrong, was it BAF? Yeah, I think BAF have taken some steps to move on. And it is that fiduciary responsibility that most of the pension funds hide behind. If you're investing in something that's got a long-term risk, the fiduciary responsibility is to minimize that. And that's what the campaign's trying to reinforce. We're trying to make them see the sense in reinforcing the quality of the investments that they're making. So if they've got the option between two sets of investments, the lowest risk should be a non-fossil fuel option. And I guess that's the fiduciary responsibility just turned on its head.
Yeah, which leads nicely on to my presentation. Do you want to say anything else, Louise, or can I crack on?
You can crack on. I was just
Great.
going to introduce you. If you want me to do the introduction, or you want to introduce yourself, either way.
I'll introduce myself then, shall I?
Excellent.
So hopefully everyone can now see my slides. So I'm Andrew Scopes. I'm a councillor in Leeds. I was elected in 2018, and I'm the lead member for pensions. I think the reason I got that role was before I was a councillor, I was a pensions actuary, which means I advised private sector pension schemes on all aspects of risk and governance. So I have some technical background, which hopefully gives me some credibility in this area. I'm also a member of the Joint Advisory Group and the Investment Panel. So I do have some say in these things. I just currently don't have a majority view on the same side that I am on. I've focused my presentation today on the financial argument because, one, I guess Mark has sort of talked around the ethical and the imperative, but also my expectation is most people on this call buy into the expectation or the ethical argument that divestment is a good thing. But if you're not sure, feel free to look me up at andrew.scopes@leeds.gov.uk. You can find me, as I'm a councillor. My information is public, and get in touch and I can talk to you about that. So the financial case is what I'm going to talk about, and why. And one of the reasons I think it's really important for us to be aware of this argument is that often, Mark was talking about officers making decisions day to day, and then councillors sort of really meant to be having the say. But I think sometimes there's a education difference in terms of the financial aspects of things. So councillors who are not necessarily of a financial background get a little bit bamboozled by technical jargon, and so we need to be equipped to articulate why we think there's a solid financial case to divest. And the reason we need a financial case is essentially around the rules that govern pension schemes legislation. We've talked a bit about the fiduciary duty. And one of the things that we need to recognise is that there's good legal precedent that says the financial element or the financial interests of the members is the most critical point of that. And that's why we need to be able to make this financial case that says there's a real good set of thinking that says divesting from fossil fuels is better for you financially in the long term. And frankly, the long term is the only period that a pension scheme can look on. So most investors, certainly equity investors, look very short term, but most investors look over the next 5 to 10 years maximum. But the West Yorkshire Pension Scheme has people who are currently aged 20, 25 in it, and they will be being paid benefits not for 40 years, and then after that for another 20, 30 years, depending on how long they live. So it's really important long-term investment. I think I'd like to also just highlight on this slide is the administrating authority of the West Yorkshire Pension Fund is Bradford. And so whilst most decisions are technically made by the Joint Advisory Group and the Investment Panel, so they're really crucial bodies, there's a little known Governance and Audit Committee, which is purely Bradford councillors who can veto any decisions made by the Investment Panel if they don't like them. And so whenever I talk about campaigning, I always talk about making sure we get in touch with our Bradford colleagues, especially because they have more influence than others. I just think it's worth noting that. Okay, so in summary, the biggest argument in my mind around divestment is what I'd call the stranded asset argument. And essentially, the argument is such that the way assets are valued or companies are valued, they look at how much you own and therefore how much that company is worth. So for example, an apple producer might have 1 million apples, each valued at £1, and then you might value that company at £1 million. And the reality with fossil fuels is that we can't burn all the oil that's held by these companies. And so there's only really a small proportion of the asset that they hold that is of value. And the reality is one of two things happens. Either we burn more of that and we have climate emergency and the value of our pension scheme is almost irrelevant because we have major climate catastrophe. And I think that pretty catastrophic, and the value of your pension scheme is probably not going to be the biggest issue on your plate. Or we don't burn all those assets, all that oil, and the value of your fossil fuel companies comes crashing down. And that is the reality. And it's not just me saying that. This is a report published back in 2018, analysing the impact, and they reckon that the discounted global loss will be, we're talking $1 to $4 trillion. Trillion is a really, really, really big number. 1,000 billion or 1 million. So we're talking mega bucks. So even if the West Yorkshire Pension Fund has a small proportion of the overall fossil fuel company assets, it's facing big losses. And I guess the question that you always get pushed back on when you talk about this is, when's it going to happen? When are these assets going to fall in value? So should we hold on to them for the next 2, 3, 4, 5 years and then sell them quickly? And the problem with that argument is it works until you're too late. And as Mark's already mentioned, it happened with a lot of pension funds with coal investments. They held it, hoping that they'd get out at the last minute. And I would say that's a risk that pension schemes shouldn't be taking. If you're a hedge fund, you might make a different argument. But as a pension scheme that's a long-term investor, we shouldn't be making such drastic short-term tactical decisions. So the transition is underway, and there's 3 key drivers for that. So one is necessity, and we all want to breathe air that doesn't kill us. The second is policy, and I'll talk a bit more about that. But I think that's going to be the biggest driver in terms of asset values, because policy often happens in shocks. So rather than having a nice general transition to a green economy, you'll suddenly get a government saying, actually, we need to change this. And so you'll usually get a shock, and then you'll have what you'd call a price adjustment. So you'd go from an asset value of, you might lose 10% on the value of an asset or something like that. And the third is technology. And this is developing all the time. And for example, I know that the West Yorkshire Pension Fund invested, I think it was in 2019, in the first non-subsidised wind farm in the UK. And what that means is wind farms are beginning to wash their own faces, as it were. So they don't need additional subsidy to work. And so if you think about it, if you are an ethical buyer, you'll pay a little bit of a premium for green energy. But as soon as green energy becomes cheaper than coal energy, everyone is going to buy green energy, whether you're ethical or not, and that will drive prices down lower. So that gap will suddenly stretch out. And so once that tipping point happens, it's going to be much more rapid. And I think that's a really important point. So once you go past the tipping point, you're too late. And when could these things happen? And so this is just a little timeline of the COP meetings, and hopefully at one or both of the meetings in 2023 or 25, we'll see some kind of policy change, and that's where we could end up with a sort of an adjustment in asset value, which would be really bad if you're holding fossil fuel company assets. Usually, I've tried to make this point, but usually when you have technology change, it happens suddenly and abruptly, and so it isn't good if you're holding assets that change in value rapidly if you're a long-term investor. When will that peak be? I've already said once you're holding it, it's probably too late. And I think there's an increasing body of evidence that says that peak time is soon. And so the carbon tracker suggests it's going to be in the 2020s. BP, obviously an interested party in not reaching peak, reckon it could be early 2020s. So the big fossil fuel companies are beginning to realise that it's sooner than we think. And just as an illustration of that point about rapid change, this is I quite like this slide because it sort of demonstrates how change happens. And so over a period of 13 years, New York in this case went from having lots and lots of horses and cars sharing the streets to 1913, when there's basically no horses on the street. But peak horse demand was actually in 1910, only 3 years before the second photo, even though peak demand was 1910, not earlier. So I think that's a really really important point. The second argument we often come across in terms of countering the divestment argument is engagement. So should we engage with companies, as in own part of BP and Shell, in order to change their behaviour? And I'm going to argue that we shouldn't. And the first reason is that so this is a quote: never in corporate history has a whole industry transitioned its core business models, so engagement cannot work with fossil fuel companies. And the example I give the McDonald's example, and my argument is this: so McDonald's is clearly a fast food chain, and if you bought millions of pounds worth of McDonald's shares and then went to every shareholder meeting and said, what we'd like you to be is a fine dining restaurant, and so you'd say it's still the same industry, it's still the same business, it's food, I would say that's never going to work, because everything about McDonald's is about fast food. So it's staff, it's locations, it's the way its stores are set out, the type of food it sells, its supply chain, everything is set up to fast food, not fine dine. And similarly for fossil fuel companies, they're trying to make this argument that they are energy producers. And so they can easily shift from fossil fuels to green energy. And I just think that's two fundamentally different. The whole supply chain of the fossil fuel companies is around the fossil fuel, the oil, the gas. And so they're investing millions of pounds in finding new gas. A lot of their fixed assets are things like oil containers, offshore pumps, rigs, and so the whole system is set up for fossil fuels. So I just don't see that as possible for a whole industry. Maybe you might get one company successful, but I can't see the whole industry managing that. The second argument, so this is Share Action. So they are a company that campaigns to get companies to change their approach. And this is a slide I stole from one of their presentations. And so the idea is you can make so much success with engagement, but if you come to a point where it's not working, the only way forward is divestment. And so that's what you've got to do. You've got to say, actually, this isn't working. Let's move on. And so again, does engagement work? The Financial Times in October 2020 said no major oil or gas company is on track to align their business with the Paris climate goal. So no, it's not working. Does divestment work? And this is an extract from the Shell's 2018 report, and it says if this were to continue, talking about divestment, it could have a material adverse effect on the price of our securities and our ability to access equity capital in markets. In other words, if people keep divesting, it's going to be a real problem. So I guess what I've tried to say here is this: firstly, divestment will work. Secondly, engagement hasn't worked and we need to do something more radical. And even if we wanted engagement to work, it couldn't work because it's such a big change in the business model. So I'll just move on to another sort of slightly intellectual argument here. And this is around asset strategy. And so there's a lot of thinking, a lot of research out there that shows that moving out of one asset class doesn't affect your long-term investment returns. So here you're saying if you didn't have any one of these types of investment, over the long term, your assets won't be any worse off. And so the argument I'm making here is, at the moment, we're making a case that oil companies are overvalued and we're not pricing in the risk of major geopolitical change. And so we should divest them. And this is saying, even if we're wrong about it, it won't affect our long-term returns. So why not do it? So we have a choice between doing nothing and taking a risk and doing something and it not impacting us. So it makes no sense to keep on with the risk holding on to fossil fuel companies. That is the point of that argument. I'm happy to talk through that a bit more if there's questions on that. And then my final slide is Norway's $1 trillion wealth fund to divest from oil and gas exploration. So this isn't just us green types being a bit hippie. This is big business recognizing the financial implications of oil in terms of long-term investment returns. So that's my slides. I think I've managed to keep to 20 minutes. So hopefully that's all right. And I'll hand back to Louise.